welcome back to another episode of Reinventing Finance. With me on the call, I have my co-host, Tom, who looks very rested after what I've heard is a 5-week,
that's very confidential. Huh?
Oh, it's goodness. Who looks very rested. Tom, how are you today?
Thank you. I'm very much looking forward to our talk to Roger.
And you know, we have Roger from DIA on the line. I'm calling in from Barcelona. I'm just divulging information. You know, this has been too long, and I'm just a tattletale. Roger, how are you today? Good to have you.
Very well, very well. It's the weather is great here, and looking forward to speaking to you here.
And for those of you who are interested on what our mothers call us, you know, on a Sunday. For me, it's Nikolaus when I did something bad. For Tom, it's Thomas. And for Roger, it's Roger. So, you know, starting with the most fundamental information first. But Roger, for the very few people who might have not heard of you, read your newsletters, attended your events, you know, both physical or virtual, for the few out there, you know, who are you and what do you do?
Well, thanks. Thanks for your kind introduction, Nick. Roger Peverelli. I'm one of the founders of DIA, Digital Insurance Agenda. And what we do is trying to connect insurtech leaders with insurance executives. There's still a lot of work to be done to digitize, transform, and innovate the insurance industry. And we believe that connecting those two blood types is essential to do that. And we do all kinds of things to make that happen.
Just out of on that note, because when was the first DIA?
It was actually here in Barcelona. It was 5 years ago in 2016, or almost 6 years ago, actually. And we hosted it in the harbor. We were still thinking that this would be a one-off event. Reggie, my co-founder, and myself, we're digital strategy consultants. And we thought that there was still so much to do when we compare the use of innovative companies to change the industry. When you would compare that with what takes place in banking, so we decided to host that show, and it was quite a success. And that's why we decided, okay, let's build a business around it.
I mean, I was one of your guinea pigs, I guess, one of your, and I think, and quite a show it was. You know, when we started talking, it was something, it kind of blew my mind. I think it set the standard for what a insurance event can be like. Before we maybe talk about, because there is an upcoming event in Munich, but 5 years in, you know, connecting insurtech leaders and insurance executives is as preeminent or as important as ever. Has something changed from what you're seeing over the last 5 years? You know, because you have a unique vantage point of how these different people, entities interact.
Yes, definitely. You know, like when we started, there was a lot of debate. Insurtech sort of was synonymous with challengers, and that already changed quite fast. I think that in our second and third year, Insurtech, the whole landscape changed in the meaning that there were a lot of enablers coming to the market. Of course, the challenges were important because it raised awareness among insurance companies that things really needed to change and create some sense of urgency. And to really move into that space, they decided to work with the insurtechs that were more of the enabling type. So that is the second wave, the enablers. Then the third wave came, which is more about ecosystem players looking how to work together with adjacent industries in health, in automotive, in mobility. And now I think we are entering the fourth wave. You know, you see a lot of emphasis on the social function, the purpose of insurance companies, and many new insurtechs are coming to the market who help to do that. Like how can we fight climate change, and to also help insurers play that role, and but also ESG kind of startups that come to the market. So that's the fourth wave, to make insurers, to make it possible for them to fulfill their purpose much better than they do today. So, and you could say like the second, third, and fourth wave, they're almost simultaneously taking place now. Let's
put a pin on the sustainability, ESG, social good, because I think it's really important, and period. But kind of looking at there's another event coming up on the 28th and 29th of September in Munich, the second most beautiful city in Germany after Hamburg, of course. So, I think you did a decent choice. You don't do any, you don't make any mistakes with Munich. It's a safe bet. So, no hard feelings. But can you let us know a little bit about what's to be expected? And if you like, also compare and contrast another event that took place a couple of weeks ago in Amsterdam, I believe.
We chose for Munich because, we did a count in our database. We have over 2,000 insurtechs in our database. And what we saw is that more than 10% of all the insurtechs globally is related to Munich in one way or the other. So you could say that Munich is the de facto capital of insurtech worldwide. There are more insurtechs related to Munich than to Silicon Valley. So that's
also than London.
Yes, definitely. Yeah, and also the difference is that whatever is based in London is very much focusing on the Anglo-Saxon market, and the insurtechs related to Munich, they more have a global perspective. So that's something that is really different. So taking that into account, that's why we've been hosting our show in Munich already for, I think this is the fourth time that we'll do it there. And I think, looking at the trends that we discussed briefly, the whole idea is that also with the events that took place the last 2 years, everything being connected nowadays, think of all the wearables that everyone has, from smartwatches to Fitbits. Think of all the connected cars, think of the homes, in which we invested quite heavily during COVID. So making them more smarter, more intelligent. All those new data streams that come with that, they offer an immense opportunity to innovate and to add new value for customers. And that's definitely one of the big topics of Munich. And in that space, what we see is that there's a growing awareness, of course, that we need to move digital, we need to move data. Virtually every boardroom in the insurance landscape is convinced of that.
And how does that, for those lucky of us, like Tom, who been in Amsterdam and been a really positive experience, as he tells me, but what is is this an either or what's the difference between the two events? What's the additional benefit, let's say, if you were already in Amsterdam, you'd say?
Well, I would say that looking at the speakers that we have on stage, there is some overlap, but every company who decided to, based on their enthusiasm for Amsterdam, also to go to Munich, we said, okay, you can come, but you need to tell a different story. So that's one thing. So the two lineups are in that respect completely different. But of course, we also have a number of very different speakers. To name a few, in Munich, one of our hosts is actually the Insurtech Hub Munich, and their chairman, Tom van den Brulle, is not only the chairman of the Insurtech Hub Munich, but he is also the global head of innovation at Munich Re. And I'll do a fireside chat with him to set the stage covering well, basically also the topics that we discussed, and his view on that, his take on that, and also how a company with the size and the impact of Munich Re is moving in that space. So that's one example. A second example is Winnie Wong. Winnie is the CEO and chairman of Asia Insurance Company out of Hong Kong, and she will speak about innovation in Asia. And there's a lot of things going on in Asia. We believe that they're much more innovative and much more entrepreneurial than what we see taking place here. And of course, they have different rules when it comes to data, but the creativity that they have when it comes to data, and for instance with embedded insurance, it's so significant to learn from. And that's why we invited her. So just to name a couple of examples.
I just wanted to add something about, let's say, you can call them also ecosystems. What I just saw in the last couple of years, because Amsterdam was not the only DIA conference I attended. I attended also those in Amsterdam before and in Munich, etc. What you just see in general, and it's the same for fintech, if you talk about the banking scene, is that on the one hand, these ecosystems or industries become more mature, but people also are understanding much better than in the past what's the core of those changes. So in the beginning, people were not understanding how important reinsurance companies like Munich Re and Swiss Re were. And it took years before a lot of people understood what Munich Re was doing or Swiss Re was doing. If you just take iptiQ of Swiss Re as one example. And then what you just see, if after attending conference after conference, that they always are there, but understanding what they are really building, like Swiss Re and Munich Re, that's far beyond, let's say, the first phase where you had this kind of e-commerce entrepreneurs who said, okay, insurance don't understand anything about the customer, and we will disrupt all those big insurance companies, and we make a fancy website, because insurtech is not about building a fancy website. And I think this kind of maturity changed, but I hope personally that we will see or hear much more insights of companies like Munich Re and Swiss Re, because there is so much knowledge if you talk about data, but also about SDGs, etc. If somebody understands what's going on with climate change and is able to measure this kind of stuff,
exactly,
then it's the reinsurers, because they have to handle the risk for the whole industry, and it's a global industry. There are only a couple of reinsurance companies. So I'm very much looking forward, especially to this kind of inside of Munich Re, etc., in your fire chat.
Yes, definitely. That's also why we asked Tom to set the stage in this first fireside chat. But you're definitely right. They're so huge, they're so significant. And what you also mentioned, Tom, is the maturity angle. Of course, that's also something that we see taking place. When we started off 6 years ago, it was all startups. And we really had to look very hard to find companies that were beyond the PowerPoint presentation and beyond the smoke and mirrors. But now we're in an entirely different stage. We see that of course valuations have dropped significantly, and the kind of insurtechs that are still able to move forward in terms of financing are the ones that have a significant track record, who have already established relationships with insurers. The scale-ups, they are able to get more funding in, as opposed to startups. And we also, of course, that's also backed by the fact that many insurance companies, if things become serious, you'd rather deal with an insurtech that is mature and that that it will exist in the coming years, rather than with a startup. You just don't work with smaller companies if your primary process needs to rely on that.
I think that's I mean, there's still innovation theater going on, and I personally feel it's even valid if you are an incumbent organization that has never incentivized or rewarded real, innovation in the sense that's create a new process and make sure that it's all actually used. It's both things. Otherwise, it's just, I don't know, fun. That it might still make sense for you on your personal journey, but I also do see that these kind of startup pitches and ideas that, I think it's around, it's not a lack of ideas. I don't think it's a lack of ideation or design thinking workshops. It's not even getting that to your first 20 purchases. It's how do you then scale that up into an organization? What actually happens when you are successful? And at that point, everyone who was kind of laughed out of the room in 2015, 2016 is not being innovative. It's the same guys. You all of a sudden talk about with consultants. You talk about, with the same guys who did digital transformation rather than new business, because all of a sudden you need to now figure out how does this work for my millions of customers, etc. And I think that you'll see that shift and that question being asked sooner. I think this is really an important point that we'll also address. Like we invited all the insurtechs that we have on stage to share exactly this specific topic. Okay, how do you scale? What are the key success factors? Because what we see taking place, like in insurance companies, in incumbents, on the one hand, you have people who are really starting to think about how to scale things. How to scale things fast, and how to implement across, for instance, different product groups or different business lines. But on the other hand, we still see many insurance companies who are what we call on a pilot safari. Exactly what you mentioned, Nick. They're basically going through pilots with insurtechs just to improve their personal skill set for their own fun, but they don't really have the idea. Okay, just suppose that this is a success, this pilot. How can we scale? So this is an important aspect. Tom, you mentioned the iptQ. I think this is a great example on how you scale business. For a reinsurer, I think thinking about iptQ is quite a leap, especially as a reinsurer. And if you see how they brought that to scale in a limited time frame, we think about 5 years, then that's something to compliment them for.
I'm also I think also the announcement you made about watching more what's going on in Asia. If you just see what's going on in that space, and if you just see the numbers. That's just very mind-blowing, and I think that also has to do with maturity, to watch much more into the numbers. That can be, let's say, the amount of IT guys building the iptQ infrastructure. I mean, it's far beyond a lot of companies being on stages and telling them how they will disrupt the sector. But the same is the case for if you see what's going on in China or in Asia in general. If you just see numbers of clients and how they gain clients and volumes, etc., that's also beyond our imagination in a lot of let's say specific cases. And it would, I think, I'm very much also looking forward to these very practical examples, because it's a kind of confrontation. So if you ask people about numbers or about even a lot of companies we sometimes know by name, but if we then dive into their numbers and see how huge they are, and if you compare them in statistics with European scale-ups or American scale-ups, it's just mind-blowing. And it also gives an idea what will happen to this whole industry in the next decades.
Yeah. Oh yeah, definitely. But it's in Asia. The funny thing is that it's not just the startups who grow fast. It is also the incumbents that embrace technology much faster and bring that to scale. And for instance, and that's, I think, is something to really have a good look at. You know, like Winnie Wong from Asia Insurance is actually the fastest growing digital player in Asia. And we're very proud to have her on stage. She is also awarded in all sorts of lists, #1 businesswoman this, like the #1 insurance innovator in Asia. So there's a lot of things that we can learn from her. And like we've briefed her exactly on, okay, what is essential to make that leap forward? Like to get out of that pilot mode, that proof of concept thinking, but really moving things to scale much faster. Like I see companies doing a proof of concept that lasts for 2 years. Well, when the proof of concept has ended, like all the findings are already old-fashioned, like already obsolete. So the pace in which you change needs to really shift to a higher gear.
A couple of kind of questions from what you've just said. And let me try to paraphrase. So in the beginning, it was a lot about, is it just vaporware or slideware? Is there technology? And so I remember you were and this was tough, you were very adamant about, you can only get on stage if you have something to demo. Yeah, because everyone could do a nice slide deck, right? What I'm now hearing is in the scale up phase, it's about numbers, integrations, etc. Maybe it's not about here I can slot together a product in three minutes, right? It's about APIs, it's about integration. Maybe a big partnership takes a couple of months to build. It's not something to demo. Have you softened or changed your requirements to show something, a demo, because it always needs to be a graphical user interface, and that is only so little of the cases that actually work, and more about business numbers, what works, insights, rather than something more haptic?
No, definitely. Like when you look at the everyone who is on stage, we on the one hand curate who goes on stage and who doesn't. On the other hand, we also provide guidance in how to present. And of course, we are very much aware that when you do things in the back end that cannot be shown, there needs to be another proof that you actually can do things. And to make that tangible, like we also invite them to, for instance, come on stage with one of their clients who can tell what actually took place. And not only what took place, but what the challenges are, and more importantly, what the results are. So did things go faster? Did it become cheaper? Did it have an impact on the top line? Did it have an impact on the bottom line? Those kind of things. So, but you need to have those proof points. That's the serious thing. You need to have that in your presentation. And of course, like if there are things that you can show, and to take it away from a PowerPoint presentation, that is very much appreciated, because it sparks imagination if you actually see things. That's an important part of looking at those demos again. It's not just about the visual aspect, but it's also about how visual triggers imagination. And when I'm in a room and I'm watching something that is meant for automotive industry, what I start thinking about, hey, this is something that could work in this way also in health. And that's the kind of thing that takes place if you see images and if you see demos. So it's really merging the two, but at the end, it's all about real proof points, either in numbers or either in demos.
So are you then yet again a little bit the canary in the mine around, you need to work with startups who have some form of technology in order to help you, and we'll curate a sample of these. And now what I'm hearing is, 7 years in, a lot of the startups, at least who can afford to be curated and present at your, they have, and these are usually not, there are some, these are people that we've probably seen before because it works. This is not a show. There's not a trick pony. You'll have companies, I don't know, like Shift, I don't know, right? Be there because the model works. But now and this is something, everyone has a platform. everyone, it's the biggest bullshit everyone has a platform, whether, an email list is a platform. But it's, in a way, it's true, that piecing together the technology to augment most cases, you can put together, with a few thousand man days. It's not an easy feat without any money, but it's a reasonably easy feat for an incumbent insurer with lots of cash. Now the question is about adoption. It's about use case. It's about business case. It's about how do you benchmark in your portfolio? What about the opportunity costs of doing a new adjacent venture versus cranking up another 2% on your combined ratio on motor? And I think this is what you're describing. Almost, I'm really looking forward to it. It's almost, a change in what's relevant, because you're a reflection of where insurtech insurer collaboration goes and what's working, because we're not doing the same thing we did 7 years ago.
No, definitely. Yeah, no, it's definitely the case. I think your analysis is correct. Like that's exactly the space that we're moving into. And also, you mentioned Shift. There are so many others that we could mention. Like when we started, they were small companies willing to invest that money to also, the show cost money as well. So at some point you need to cover that to get on stage. But it brought them business. It brought them brand awareness. It helped them to test their ideas with people in the room. And at the end, they exist. They still exist. And they grow. So that's basically also our measure of success. Is does it help to further the industry?
No, I fully agree. And I mean, I can, especially now with Corona. I mean, I always had the hypothesis that whilst flying for someone for coffee for a nice meetup is gonna be significantly reduced and not bounce back, going to high quality events and actually making the time to connect and talk, which you don't do in a hyper optimized Teams or Zoom calendar. I like it, right? I can get so much stuff done, but it comes at its cost. And I feel that this is one of those investments where it really pays off, where you do talk, do mingle, you reconnect. I'd be shocked if I don't meet 50 people that I already know, but don't have Zoom meetings the whole time, because it's different, right? And it's also fun, by the way.
Exactly. It's really about meeting old friends and also making new ones. And I totally agree. We also see quite a number of companies coming to the event, not just with one person, but with a team, especially to kick off their new strategy cycle for next year, or to reassess their strategies and see what they could do different or what they should tweak. And the best way to do that, of course, is with your whole team. So you go through the whole journey together and have a similar starting point when you arrive back at the office. And we also see basically that's replacing those kind of team meetings that you mentioned, and especially in international teams, it's taking place more and more. But yes, definitely agree. And we are craving for personal contact so long that we also saw that in Amsterdam. People are so excited to meet each other again, and so are we. So that's also the reason why we are continuing what we're planning to do.
Sorry, Tom.
I also wanted to ask you if there is any news about your international corporation, because I had the impression that DIA becomes more and more global. So on the one hand, you have Asia, but we didn't speak about the US and about your corporation. So I was just curious if you wanted to say something about your plans you announced, I think just at the DIA in Amsterdam.
Yes, of course. I think it was pretty much in the news that we are teaming up with ITC. ITC, everyone knows ITC, of course, from Vegas and from their event in Singapore. So we sort of fill in the gap as it comes to Europe, but that would be a very superficial way of thinking about that. Like the shareholder of ITC and of us is a company called Clarion Events. They have over 200 conferences worldwide in all sorts of domains. And they have so many assets, competencies, and talent on board in their London office that we can use to scale and to do things in a quite different way. I think that during the COVID years, we've been quite successful in becoming like a year-round partner for the companies that we work with, our customers, helping them with brand awareness, proposition awareness, and to build business. But taking all these competencies of Clarion with us, we can grow that position even stronger. So what we are planning to do in 2023 is we're moving Amsterdam to Barcelona in terms of the flagship event. But we'll also launch a series of other events, smaller, like one-day events. And we'll do that in cities like Paris, Amsterdam, London, Milan, Madrid, and Dubai. Those are the ones that we are currently working on. So that will have really a presence throughout Europe and reach out to those customers that we and meet them in their environment, build a community even on a local basis. But really, like to be of service to the industry throughout the year and also where they are. So basically, that's what we're planning to do, and we're already working on.
Sounds very interesting.
I would like to, if it's okay, I would like to dig in to two topics. I would skip personally over new data streams and the foundation training, not because it's any less interesting, but I have more personal interest in the two other topics that you've mentioned, but we're very happy to circle back. This is, I don't want to diss any topic here. Corporate venturing, one, you've mentioned. So what do you see? Is there a emerging playbook? Is there different playbooks? Where, how is this developing? And do you have some examples?
On the one hand, we see that although people work with insurance companies not to start a corporate venture, we do see there's a lot of entrepreneurs who have a good idea, who know already in advance that, okay, I can start this as of scratch by myself, and then hopefully in 2 years I can team up with a corporate partner to scale this. Instead of that thinking, they prefer to immediately reach out to big insurance companies with that idea and move that idea forward. And what we see taking place in insurance incumbents is that they are more and more aware of where the gap is. The gap in skills is that entrepreneurial spirit. So they're building networks of entrepreneurs that help those corporate ventures, carve-outs, spin-outs, or however you want to call it, to really scale faster in a really entrepreneurial spirit. And I think that's a good way of working together. Like on the one hand, you immediately use the scale and the assets that are available in the incumbent, and on the other hand, you complement that with entrepreneurial skill set of outsiders who've been through the journey, for instance, who are very knowledgeable about, for instance, the adjacent industry that this corporate venture responds to. So I think there's a lot of opportunity and a lot of possibility of moving further in that route, and also making corporate venturing much more successful. And of course, it's also a way to get out of that pilot phase, because the pilot safari that I just mentioned is also nurtured by the fact that there's still this not invented here syndrome within many incumbents, and corporate venturing, well, that's a way at least to close that gap a bit more.
I can fully, I fully agree, and I think it's almost like kind of cutting out the middleman. if you're in B2B enterprise, why go through a VC who then has insurers as LPs? Why don't you go directly to the pudding? And you never know how the market goes, but for most currently, going public in the next 12 months is probably not very likely anyway. What I see is two other kind of use cases for corporate venturing. One is to win over the big partnership deals. So I believe that Swiss Re and founded Movings together with Daimler to lock in that distribution access, and then the other things. It's also something that if you're looking at some of the big embedded plays, especially from Zhong'an, sure, they have good technology. Sure. I think if you're looking under the hood, let's see how if tech talent is really cheap, how good is the technology? Really, usually you get better technology when the talent that builds is quite expensive, but that on the side. One thing that they've had as an unfair advantage was SoftBank. So they would just put these mergers in. So, for the very big ones, rather than saying you can sell my product, is we'll create a venture together. So corporate venturing as a way to access a highly competitive embedded space where product, commercials, technologies all being commoditized is actually an interesting way. Yeah. And secondarily, especially when you're in an embedded space, and with insurers who cannot deduct VAT, there's a very, very, very strong commercial incentive to build technology, just from a P&L and balance sheet perspective, plus the STEM. I mean, every insurer can calculate a 5-year plan. You're not selling subscriptions to startups here. So understanding corporate venturing, in my view, is a very important skill set for procurement and sales in B2B SaaS, because let's face it, at some point, I'm not sure if I was an insurer, I would not pay in increasing and forever subscription revenue and transaction revenue if I'm actually making you big. I think we need to find a different model of rewarding what is invested, but also sharing any spoils potentially on the equity side if this thing goes really big. And again, corporate venturing is it can be a solution to putting this kind of into the future. And so I foresee that as a very repetitive and useful structure to incentivize, strategic partnerships above and beyond of what we've seen.
Yeah, I think you're raising a very important perspective. Especially in Italy, we see some very nice use cases that already are taking place in this space. Take, for instance, Generali. They're working together with Telepass. Telepass, we all know from we need to pay tolls when you go through Italy, and that's where you see the sign of Telepass everywhere. So that's one example. Unipol is another big player in that area. They are so much aware that at some point they need to get out of car insurance. So they're creating all sorts of ventures. They purchased a car leasing company. They found out that's actually a very nice example. They got over 2 million connected cars driving around. So insured by Unipol with black box it in there. And out of the data, they determined that Italians hardly drive 250 kilometers on a day. And the funny thing is that if you take that measure, that all those people could drive an electric car. And that's when they started thinking, okay, why not think of a way to use the car leasing company that we have, offer private lease, and combine that with the purchase of an electric car, and of course with embedded insurance. And we'll take care in a partnership with a electricity company, a utility company, that there's this charging station in front of your house. Well, those kind of things is something that you can only accomplish if you have also the financial capabilities, of course, to do that. And I think that's why I really liked your point, Tom, Nick, is that, first we thought of the incumbent being necessary for insurtech to scale because of the brand power and because of the distribution power. But now it becomes clear that in addition to that, and perhaps even more important, is the financial power and the investment power that goes with it. And then that's, of course, a key asset that the incumbents have that will allow a lot. But still, you need to have that entrepreneurial spirit to make those kind of decisions. And like especially at Unipol, it's one of the companies that I think they're an incumbent, they're big, but looking at all the things they do, they are so entrepreneurial, and so they got so much imagination, and you need to have those spirits on board. And unfortunately, I must say that there's still some incumbents that lack those kind of skills.
Absolutely. But I think it's increasing. And the question is also, and maybe this can then segue into the third point, ESG, sustainable. Maybe there are some innovations and business models that do better with having an investor and a partner on the side who thinks in decades, rather than scaling and flipping companies based on public market cycles and trying to extract a 10x return that would otherwise be there to be redistributed across other stakeholders, right? And the other point about investment power. So when we're talking about ESG and climate change, I have to admit, I mean, and that is why I'm really looking forward to the event. I think it's pretty barren. ESG seems like a fig leaf, seems like a reporting standard. I mean, I think the EU taxonomy is a joke if you include gas and nuclear energy, personally. And it just feels like a joke. I mean, if I have a 2.5-year-old daughter, and if she asks me in 30 years' time, like, Dad, thank you, you've been hopefully a great father, we have a great relationship, and, maybe she, I can support her financially as well. But I feel scared right now that she'll claim to me and say, Dad, you've been sleeping at the wheel. What have you done when this whole shit hit the fan? Literally, I mean, it's shit hitting the fan. And so I think there's a lot more we can do than writing ESG reports and hiring a great consultancy and accounting firm to do that. So where do you think we are? And I believe, by the way, that insurers, with their business model of taking money, investing money, thinking over the long term, having their business model totally changed around climate change, are as close to the fray as anyone. So what do you see is happening here? Is there any best practices? Is there any good examples, or is it to all of us to kind of co-create here?
Well, I think that, and that's not to be, I think what you're mentioning is the right word. We all need to co-create that. I think we're still exploring the space. I think that when you look at where we were, similar to the stages that insurtech went through, we see similar stages also in this space, right? First, it was about reducing the CO2 footprint and turning off the lights in offices. Basically, that was the whole idea a couple of years ago. Just taking back on the discussion that we just had, the real asset is the financial power and the investment potential that incumbents have. So putting that to work, that's the biggest lever that the industry has. Well, but still we still need to have the right initiatives to invest in. And also the metrics to measure those investments by is different than in a usual industry, right? We've been, in my previous life, I'd done quite some work in banking, especially looking at how sustainable investments could relate to the investment criteria of banks, and in particular the financing criteria. And there was still a lot of room to change. Like the time to return an investment in a wind park is different than in a traditional investment, but you do know that the wind continues to blow. So there's the level of uncertainty is totally different. The sun is probably going to shine, and there's other measures that you need to take into account that weren't there at that point in time. So we still need to co-create. There are still a lot of things that need to be settled, but the key to unlock that whole potential is, on the one hand, the financial capabilities and the investment powers, but also, and that's equally important, insurance companies need to have the mandate to play a role in this space. And I'm not sure if that mandate is already there. Still many banks and insurance companies are looked upon as being greedy, not taking their customers seriously, earning money at the expense of customers. And that's a position that we need to change, because if we don't change that position, we cannot claim, so to say, the mandate to also play an important role in the important societal changes that we're facing.
I would like to add a question on this whole sustainability or SDG topic. What bothers me personally, and that's also to add what Nick said about his daughter, is that if we just see the whole topic of purpose and also the younger generation asking for taking this responsibility, what amazes me is that especially an industry like the insurance industry, which is so global, and especially if you talk about the reinsurers, don't see this as an enormous, let's call it an opportunity to position themselves. Because if you just see, if there is an industry which will suffer from climate change, number one, it will be insurance. Because, I mean, who is paying the bill for all this climate catastrophe? I mean, this will be the reinsurance in the end. So why don't you claim this space as a reinsurance company, position yourselves in a future-oriented way, and take the responsibility? Because on the one hand, you can wait for a mandate, but you can also take the mandate. So we're discussing about Unilever and all those companies if they recycle their PET bottles, but I think the insurance, or especially the reinsurance space, could be a much more interesting space to talk about purpose, and also, let's say, pricing it in the kind of products. So if you just take very practical examples about the insurance premiums of SUVs, etc., I think there's a long list of topics which could be addressed. So I actually hope that DIA also could play a role in this, by addressing this topic, especially to the reinsurance, because it's such a global and powerful industry.
Yeah, well, that's exactly also what's taking place. So, for instance, I just mentioned we'll kick off the conference with a fireside chat with Tom van der Brulle, and this is definitely one of the topics that we'll discuss. It's not just a question of business model, but also about the talent and your position on the labor market. And what we see taking place across industries is that people really want to work with a company that you feel comfortable with in terms of the purpose that they want to go for, and they're even willing to give in part of their wage of their salaries if they can work on projects that help to make the world better. And this is, of course, definitely something that is part of the agenda of the big players. And I totally agree with you. Companies like the big reinsurers, but also the assets of a company like Allianz or AXA. If you look at what they have under management, it's so significant. They can really pull their weight in a different way by a more stricter guidance on what they ask their investments to do. Well, having said that, you mentioned one thing, SUVs, and how to embed a certain price in there. We see that taking place more and more, in particular also in home insurance, in property insurance, I should say, where incumbents are already thinking about, okay, this is a building that in some time need to be it needs to be replaced. So what are the costs of replacing that building, and the environment costs that go with it, and how can we make sure that that's part of the premium? So there's a lot of things going on, but as Nick said, it's still co-creation, and that's not bad. It's good, because I think that we need all the competencies that we have, not only in the insurance industry but also across the border. For instance, in this case, in building, in the car industry, to make sure that it's really a joint effort to make the world a better place. And in that case, Nick, you could easily, with a restful mind, tell your daughter that you really did a good job, at least to your capabilities.
And I think, thank you. I'll see how it goes in 30 years' time. I'll send you a text or however we, communicate in the metaverse or whatever. But I think as a final point, and I think Tom did a very important twist here. And I think it's to say, don't wait for the mandate, take the mandate. There's more to be a good citizen or corporate citizen than fulfilling the law. I think I think that's really key. Now it needs to work within your mandate to, you need to keep all stakeholders in power. And I believe that you also need to, it shouldn't be charity. I don't believe that charity is the right vehicle of this type of change. But I think, I'm really looking forward to those conversations in Munich. And let's have a chat about how we can take a mandate also on sustainable insurance. And I think it's totally okay that we don't have all the answers right now. I'd be shocked if we weren't so much smarter 5 years down the line than we were today. The same way you are smarter about what's going, we're learning as we go along. But I don't know, I do feel the winds of change blowing, and it's an exciting time. So let's meet up in Munich and co-create.
Yes, I could totally relate to that, and also to what Tom said. When he mentioned that, I was thinking of an old saying. Someone said, "Is it more fun to be a pirate or to join the Navy?" And of course, but I think that in this point in time, and in the community that we're in, insurtech, insurance innovation, insurance transformation, the real challenge is to be a pirate in the Navy, and to change that. And as Tom said, take that mandate and take it from there.
Awesome. Become a pirate in the Navy. That's the headline of this podcast. I think we have it. It's gift wrapped. Roger, Tom, thank you.
Thank you.
See you in Munich.
Okay.
See you in Munich.
Thank you very much.
Care.
Bye-bye.
Bye.
Bye-bye.